Hello, and thank you for joining us on the Optimal Wealth Podcast, where we discuss creating passive income through real estate. Our mission is to help educate investors on how to grow wealth and invest passively. My name is Jared Alexander, and I am a passive investor, currently in 6 syndications as a limited partner. I am also the founder of Optimal Equity Group, which is a real estate investment firm that was created primarily to help educate the passive investor. We do that in a couple of different ways. One is we provide education to help give you the confidence to get into the passive investing space. And two, each episode we will interview amazing guests that explore the strategies, insights, and secrets used by successful investors. Whether you're a seasoned investor or just starting out on your real estate journey, this podcast is designed to help give you the confidence and knowledge you need to make informed and profitable decisions. And today, I am super excited to introduce our first ever guest on the show, my good friend, Randy Smith. Randy, welcome.
Awesome, Jared. Super excited to be here and be on that very first episode. I know we're making history today.
Yeah, absolutely. Absolutely. Well, let's go into a little bit of Randy's bio here. So Randy Smith is the founder of Impact Equity, which was formed to help educate help investors achieve strong results in their passive real estate investing strategies. Randy and Impact Equity have helped more than 90 plus investors place over $7 million across 3 operators and 10 different opportunities since launching in June of 2022. Randy started his real estate investing career doing out-of-state single-family long-term rentals, and he quickly realized the many additional benefits he could receive by switching his strategy to passive investing in multifamily syndications. Randy has now invested in 24 different passive investments with 10 different operators, which gives him the unique knowledge and expertise to recognize a strong passive opportunity. Randy currently resides in Peoria, Arizona with his wife, Jenny, and he spent 25 years working in various business development and leadership roles in corporate America. Randy, welcome to the show. We're so excited to have you with us today. And wow, what a resume, right? And I've, had the pleasure of watching you kind of throughout that journey, and it's been really cool to see the success you've had and just the inception of Impact Equity just over a year ago. So if you would tell us a little bit more about yourself and how you got started in the world of real estate.
Yeah. Thank you. That's quite a mouthful that you shared there. It makes me feel every bit of the 50 years old that I am when you share that. But so let's see here. So I was a corporate America guy for a lot of years. And I got struck by the layoffs that you hear so many different people do. And I ended up actually getting laid off probably, what was it, 12 or 13 years ago now, after being with the company for 10 years. And at the time, I had a severance package, but every single day that went by, it got scarier and scarier because I knew once that severance was gone, either one, I was going to start accruing debt, or two, I was going to have to decrease kind of the quality of the job that I was searching for. So fortunately, I ended up finding a job and ended up having another 10 or 12 great years in corporate America. But about halfway through that last 10-year period, I made the decision to start investing in real estate pretty heavily and pretty aggressively. And as luck would have it, 5 or 6 years later, I ended up getting laid off again. But fortunately, a large portion of my monthly expenses for the household were covered through all of my passive income at that point. So it really was kind of a planned and strategic approach to decreasing my dependence on my W-2. But that was something that took a lot of years to do.
Yeah. Well, and would it be fair to say that you probably wouldn't be sitting here with being the founder of Impact Equity if you haven't made those decisions to invest passively just a couple years prior to?
Yeah, absolutely. It's you know my story. You read the bio there.
Yeah.
You witnessed a lot of it. As an active investor, I found out pretty quickly that uh, I wasn't going to be able to ramp that to a level that I needed to ramp that. So by shifting over to passive investing and getting a lot of experience there, that really opened up some doors for me when I did finally get laid off again. That kind of set the stage for impact equity and all the success we've seen in the last 15, 16 months or so.
Yeah. Yeah. No, that's awesome. Well, and, both of us come from the sales background, right?
Yeah.
And you get paid on the performance that you put in, and it's month to month. It's not what you did for me last month or last year.
Yeah.
It's what are you doing for me today, right?
Yeah.
And I mean, for myself, I'm, 100% commission. It's like, it's scary, right? It's scary with, I go out and work, for one, get fired or get laid off or break a leg, and I'm not able to go out and, see appointments on a daily basis. It's like, what? I don't have any income to rely on, otherwise. So, I think it's definitely, and you've helped me with this actually along the way. It's smart to put these investments in place to help create passive income that, or bail box money, right? That, and when these things do come up, when life happens, right? Like I have a security blanket to rely on,
Yeah.
so tell us this. What did your first actually, what? I'm going to back up a little bit. So tell us about your transition. So I know you talked about buying some single family homes. Tell us
Yeah.
about the process getting started there, buying a single family and your transition into multifamily.
Yeah. Yeah. So, I was one of those guys that had analysis paralysis for probably way too long. I listened to podcasts and read a bunch of books, and ultimately, I allowed myself to get distracted by a bunch of different things and not pull the trigger and jump in. But I ended up listening. I was listening to a podcast, the Real Estate Guys radio show, and I heard a guy come on that was talking about turnkey rentals in Kansas City, and I don't know if the stars were aligned or if I had just heard some motivational speaker talking about, just do it and get started. I don't know what it was, but for some reason I made the decision there that I was going to jump into turnkey rentals. And I ended up calling that guy and getting on the phone with him and starting analyzing some properties. And I will say analyzing very ineffectively. um, and I ended up buying two properties from that guy in pretty short amount of time, and made a bunch of mistakes and chose probably the wrong operator to partner with. But had I not chose that operator and had I not bought those houses, I would have not found my next strategy, which was the BRRRR strategy, within a year or so. So
Right. So that pretty much just got you over that threshold, right? Got you out of that analysis paralysis.
it
And
did.
knowing you and knowing that transition, I know those deals didn't look like what that guy was presenting either. So there was definitely some bumps along the way there, huh?
Yeah, I don't think there was anything malicious on his part. He had a product he was selling. I did not do the due diligence that I should have done. I learned very quickly I should be doing my own inspections and trusting those inspections, and I didn't do any of that. So I essentially got excited and made a decision to move forward without doing, the type of due diligence I do today with operators for sure.
Right, right. Well, in hindsight's always 2020, right?
Yeah, yeah, exactly.
And so all right, so you got the single family homes, and then now what? I mean, are you so you're doing, I believe, what's called the BRRRR method on these, so you're buying, rehabbing, renting, refinancing, and repeat, right? Did I get that right?
Let's see, it's buy, rehab, rent, refinance, repeat.
Yeah.
Yes.
All
So
right.
you're buying the ugly house on the street, you're fixing it up and putting in a tenant in it. And then you do this cash out refinance thing, which is just amazing. Yeah,
Right.
absolutely. Yep.
Right. Well, and so, what the goal in this is you're trying to be passive, right? Because at this time you're still working your W-2. and so and you got a property manager. These are all out of state homes. So
Yeah.
obviously you're 2,000 plus miles away. And
Yeah.
so walk us through that, and how that worked out. Was it passive like you thought or how? Yeah.
Sure. Yeah. So I mean, that's the punchline. I came in and I don't even know that I was looking for passive income at the time. I was looking to invest in real estate.
Right.
And I think later in my journey, I heard more and more about passive investing and looked at what I was doing, even with turnkey. I think turnkey is by definition, is supposed to be more passive. Burr certainly is a project to get that thing renovated and a new tenant in there. And, if you do it right, and you get enough of these things and you have good property managers, it can be somewhat passive after you get the tenants in the units. But my experience was not. I was very involved with the contractors. I was very involved with the property managers. We flew out to Atlanta a number of different times, meeting with realtors and driving neighborhoods. And like we spent a lot of time and energy and money finding those assets. And, we did very well on those. We certainly did. But I think a large portion of that was because of the timing. We were buying these houses coming into COVID, and the Atlanta market was just on fire. So, like, if you bought anything and held on to it for a couple of years, you could turn around and sell it and make a pretty hefty return. But there were great experiences there that I would not trade in. I'm really glad that I did it. And I might even do more Burr investing in the future, but the market just didn't allow it at the time. So.
Yeah, no, definitely. Well, and my story is similar. I once I decided to pull the trigger and got out of that analysis paralysis phase, as I ended up buying that single family turnkey home in Kansas City, Missouri, right?
Yeah.
And kind of the same idea. Thanks for touching on the passive, or if you really weren't sure you wanted to do passive, but kind of the idea of turnkey, like you mentioned, is I'm just buying this house with a tenant in place that has a property management company already managing, the day to day, and if the repairs or I'm, just kind of the pocketbook behind it, right? And
Yep.
and so that was kind of my idea, and the goal was to do this. They're roughly cash flowing around $200 a month at that time, which was pretty good for a single family home.
Sure.
And then 4 weeks later, I get a call with a $4,000 sump pump repair, right?
Yeah. Yeah.
A sump pump replaced, landscaping, all that fun stuff. And I'm like, wait a minute, this just wiped my cash flow out for essentially about 2 years.
Yeah.
And the goal is to help create less dependence on my W-2 and eventually replace my W-2 income. And it really made me take a step back and look at my strategy and what I'm doing. And thankfully, as I know, again, your next steps where we started discovering multifamily
Yeah.
and the passive investing space. And so would you tell us about what did your first passive investment look like, and how did you educate yourself?
My first multifamily kind of venture was not passive. As you recall, like you and I actually looked at some multifamily in Atlanta. We looked at some multifamily in Arkansas. And I remember kind of this point where it was like, we're getting ready to write some really big checks. And you and I had no business taking over businesses of that size and putting that type of equity at risk. And in hindsight, I'm really glad that we didn't jump into those, because I think it's possible that could have gone well, but it's possible that could have gone really, really negatively as well. So, and I think like any single family investor, at some point you do start to think like, how can I get more doors under a roof? How can I tackle this and scale this faster? And the multifamily space, or multi-tenant, being even self-storage or mobile home, it starts to look really, really attractive. So I kind of just continued that same journey of education and podcasts. And, at this point, I had been listening to a handful of podcasts, probably 4 or 5 years at that point. And one in particular was an operator that buys mobile home parks all over the East Coast and numerous states over there, and decided to place my first passive investment with one of those podcast hosts, Bigger Pockets, actually, with Brandon Turner. And my thought was, if I'm going to invest in this space, I want to invest in what I considered a big brand in the space, and somebody who I felt like I knew, like, and trusted, which I felt like I had because I had listened to hundreds of hours of him on a podcast. And it seemed like a good place to put some capital. So, like a lot of folks, I ended up leveraging an old 401k that I had sitting in some Schwab account. I ended up moving it over to a self-directed IRA custodian, and I placed my first investment there. And kind of like the single family thing, after I got that first distribution, I got really excited about it. And I invested in another one. And after I got that first distribution, I started investing more. And, fast forward a few years, and I'm in 24 deals now across all kinds of operators and asset classes. And I've got diversification, probably better than I ever even had in the stock market, quite frankly. So, yeah.
Yeah. No, that's awesome. And I think it's great you touched on, the self-directed IRA, because when I started that, I had no idea I could even invest in anything outside of the stock market or mutual funds or bonds or whatever that was, or REITs.
Yeah.
I just had no idea. And being able to, especially being a little younger, it was like, hey, I also did my first investment through through a self-directed IRA. And it's like, hey, I'm going to diversify my portfolio. I can't touch this money until I'm 59 and a half anyways. Like,
Yeah.
why not? Right. I mean, and for me, like, I just love the idea of, of course, multifamily, which again is, primarily what this podcast is based on, and, the passive investing space. But I love the brick and mortar assets. I could see, touch them. I could drive by them. Right. I mean,
Yep.
it's, and so, yeah, thanks for touching on that. And honestly, we could spend a whole podcast just talking about self-directed IRAs.
Well, and I think it's important too. Like, I looked at those dollars just sitting out there, and not that it wasn't hard money earned over many years, but it kind of feels like play money almost, because you can't touch it until you're later. And for me, it was a safe place for me to grab kind of a bucket and use those dollars without really impacting my bank accounts or impacting my cash flow, but allow me to kind of test the waters to see, like, when I start getting ready to write real checks and wire dollars from my bank account, this gave me the ability to get comfortable with that before I started doing it. So, and there's a lot of protections that are in place through those custodians that keep you from making like big tax, hurting the tax consequences and creating a taxable event. So it's important to work with a good custodian too. So
yeah, and probably also add a good CPA that understands this type of investing.
Absolutely, yeah,
and not to say, because there's great CPAs out there, but a lot of them just don't even know, or are just not aware of, or don't have the education of investing, with the IRAs through syndications in real estate, right?
yeah,
And so
yeah.
understanding the tax benefits there. So, disclaimer, we are not CPAs, tax advisors, right? Talk to your CPA. But yeah, I mean, this has definitely been a great strategy that I know we've both taken advantage of, and will continue to do.
Yep,
I'm sure.
absolutely.
Right? So, well, let's jump in. So, what are some questions that you ask a sponsor when you're first? You kind of hear when you start getting into this space, invest in someone like and trust. What does that look like? What was that process for you?
Yeah, so for me, it was at least those first ones. I didn't know what I didn't know, so I was asking the type of questions that an uneducated, inexperienced passive investor would ask, and um,
Well, now,
I did.
did you go to like Google and to say, what do I ask a sponsor, or like how did, yeah,
Yeah, I'm sure I did. I'm
yeah,
sure I had, top 10 questions to ask a syndicator or top 50 or top 100, whatever it was,
right,
right?
right.
Um, but really what it was is it was a process of getting comfortable with the operator. Um, simple things like, I mean, you can ask 100 different questions, but like to get a feel for how somebody responds when you ask a difficult question, do they have an answer? Does it seem like they're trying to backpedal? Is it something they're trying to avoid? You know, like those type of things. After 25 years in sales, you get to a point where you become a pretty good reader of people, and you can tell when people are being dishonest or not comfortable with how the conversation's going. So, the goal initially was just to spend time with those operators and ask whatever questions kind of come to mind. Of course, review the materials and do those. But as I've gained more and more experience in this space, I know more the questions that I need to be asking, and they're, especially today, they're centered around what type of financing are we getting, what type of assumptions are we doing with our underwriting? Are we assuming that we're going to raise rents by 2% per year, 5%, 7% per year? What's going on with the taxes in your underwriting model? What's going on with the insurance in your underwriting model? Um, looking at vacancy and loss to lease and all the metrics that you will start to know and understand. But just asking those type of questions, and a lot of times too, you'll find that operators, they're usually a team. So like you'll have kind of a face of the operations, but then you'll have like an underwriter and maybe an operations guy. So it's important to ask those guys questions that are relevant to them, and then talk to the people that are really involved with you want to talk to the underwriter if you're asking underwriting questions,
Right.
not getting the other guy's perception of it. So
Yeah.
that's just kind of some thoughts around that, but maybe a good
Yeah.
place to start. Yeah.
Well, and that makes sense. And thanks for sharing that. And one example is just like the rents increase, right? Like if you look at a pro forma, which is like the business plan, the syndicator operator, which are both the same thing. Your general partner, syndicator operator are the guys, the groups going out and buying these deals. But if you're seeing 10 to 15% rent growth year over year, that's a question you need to ask, because right now we're seeing 2, 3, maybe 5%, but 2, 3 is kind of the average right now. Is if you want to see, and I want to see someone that's not being bullish on this. That's definitely being conservative, and with the hopefully to exceed those projections. But
Yeah.
like let's be yeah, let's be conservative here. So yeah,
But
it,
it's funny too, like every underwriter you talk to will say that they're conservatively underwriting. Nowhere will you ever find somebody that says, we're very aggressive underwriters. And if all goes perfectly, everybody thinks they're conservative, when in fact most are not, I would say.
yeah,
Um, but I think kind of a good simple question, and the thing that I look to the most is I always look at track record. If somebody's telling me they're going to be able to do something, I'd like to see that they've done that um, multiple times. And I think it's also important for people to be focused on a particular type of business model and do it for years and years and years. I get concerned when I see people doing development and value add and stabilized and self-storage and mobile home and like if they're all over the place, that concerns me. I like boring singles and doubles down the fairway. What other sports analogy can I use? Like, I just want easy stuff, and I want
yeah,
them to do it, be very good at it. Right.
right. Yeah, this is not a get rich quick, overnight type of deal. This is get rich
Yeah.
slow, and over time that money though it will build and compound. You put
Absolutely.
$100,000 into a deal, and they sell in 3 to 5 years. That one turns into two, two turns into four, four turns into eight, and next thing you know, that's looking a lot different than
Yeah.
it did just, I mean, 7 to 10 years ago, right?
Yeah. Absolutely.
Um,
Yeah. It starts to get pretty exciting after a couple of turns.
it
So,
really does. Yep,
yeah.
absolutely. And then you start stacking those, and then it gets very exciting, right?
Yep. Yep.
Um,
Exactly.
yeah. So, well, awesome. Well, so now I want to touch on this because I know you can definitely speak on this and relate to it. Is tell the listeners the difference between a cash flow investor, and a growth investor, and your experience with that.
Yeah, good question.
Yeah.
And a question I wish I would have been able to answer when I first got started. Um, but and it's interesting. So I was a high income sales guy, and I specifically did not want more income because I didn't want to pay taxes on it. In fact, I was trying to get to a position where I can make less income, albeit not zero, like I did after the layoff. But yeah, so at the time, I was a growth investor because I wanted to invest. I cared very little about monthly, quarterly, annual cash flow. I just wanted to see that investment grow as fast as I possibly could. And the goal there is really kind of striving towards some magical number that you want to hit, some net worth number to which then you can shift and become a cash flow investor. And that was my strategy. Now, what that strategy doesn't take into play is that layoffs occur, challenges happen, and it's possible that you might have to shift from being a growth investor to a cash flow investor. And a cash flow investor is somebody who needs the monthly or quarterly distributions to actually support their household and their household expenses. So when shifting from growth to passive or to cash flow investor was a different a switch in my strategy of my investing style. Fortunately, I was able to kind of shift gears quickly and invest in a number of cash flowing investments. But it's important to know on the front end what exactly it is that you're trying to achieve. Are you trying to offset your income, like truly offset that income, or are you just simply trying to grow your nest egg? And once you have that answer, it's a lot easier to go out and find the right type of investments.
Yeah. Yeah, no, thanks for that. And for me, I had to really sit down and look, and I think it's important to, when you're making these types of investments, to really sit down and establish what are your goals, right?
Yeah.
What are your goals? What's your why? What's your reason behind why you're investing, right?
Yeah.
Because, for me, I as well, I actually am still a cash or a growth investor. I am just trying to build my net worth and do that compound my dollars over the next 10 plus years. And but again, Randy, like that was your goal when you had your W-2, and then that quickly shifted. So it's you got to learn to adapt depending on your circumstances, of course. But yeah, I think that's very important to establish, and just taking the time. I know, Randy, you and I both do this, is at the beginning of each year, write down our goals and go through it, the different topics, being
Yeah.
financial, relationships, family. I mean, hitting all the targets and topics there. So it's definitely important to look at. And now, so you're doing these passive investments, right? We talked about your first deal, fast forward to 24 deals, right? And I know it's, ATM funds, car washes. You did do a self storage too, right? Yeah.
I did do self storage
You
too.
do self storage, multifamily. All right. So after experiencing that, obviously, as we read in your bio, you are the founder of Impact Equity. So I'm assuming, being a sales guy, you find something you love and you just want to shout it from the rooftops, right? So
Yep.
tell us a little bit about Impact Equity.
So I kind of fell into impact equity. I had been investing very heavily with a local operator here in Arizona, and I had referred, being the sales guy that tells everybody what I'm doing. I had referred a bunch of people to this operator, and they invested with him. So when I ended up getting laid off, I ended up, like most folks do, is you get on the phone with everybody in your network and just start talking about other opportunities. And um, I knew that I wanted to do something in real estate. I wasn't exactly sure what it was going to be. I wasn't quite sure if I wanted to go into full on syndication to kind of mirror what some of these big operators are doing, or if I wanted to find something else. And in having the conversations with that operator, we uncovered the fact kind of together that I had a fairly large network of high performing salespeople that might not have had access to these type of deals because a lot of these deals are our friends and family. And so I decided to partner with that operator and launch Impact Equity with really the idea of sharing my knowledge and expertise and experience in passive investing with my community, and then helping introduce my community to like operators that I had vetted, that I had personally invested with, and that I had some confidence in. So I launched a first deal and we were able to bring a number of investors to that deal. And then Impact Equity's kind of mission started to evolve and grow. And ultimately, it's gotten to a point where, our goal is to help 1,000 investors make their first or next passive investment. And we want to be able to provide uh, diversification across multiple asset classes, multiple operators, multiple deals, multiple geographies, even multiple business plans to really be kind of a one-stop shop for the passive investor, and very specifically focused on working with people that have similar backgrounds to me. So sales guys in financial services or in, even environmental services. So really just a prior version of me is my goal. Just like with you, with Optimal, like your goal is to help those people with similar backgrounds to you that you can expose your network to. So we've seen a lot of success and helped a lot of people up to this point, but I feel like it's really just getting started. So
Yeah, no, absolutely. And yeah, thanks for sharing about that. Cause I love what you're doing and the goal, right? I mean, to help 1,000 investors, invest in their first passive investment, that's life changing, right? I
yeah,
mean, it really is. I mean, just think of the freedom, of course. And again, just a reminder, this isn't a get rich quick deal. Like, but in
no,
10 years, right? If they can invest 25 to $50,000 per year or more, like
mhm,
as these start to stack up, I mean, you're in a lot different position,
yeah,
in 10 years and talk about, I think a lot of us want to just buy back our time too, right?
yeah,
We want to have more freedom to create our own schedules and of course I don't know, like you and I, Randy, will always be working, doing something, right? We
oh
just
yeah,
can't sit still. We were talking about that the other day, but I want to have the freedom to decide on where I want to spend my time. And
yeah,
a big focus of that is my kids. My family. That's a big why for me, right?
yeah,
And so, no, I just, yeah, I think that's awesome what you're doing. And I want to, just go back to that Atlanta deal
yeah,
because I don't know if I shared with you, but I actually went on Zillow and seen what that sold for. And I don't know if we would have got it at our offer, but it was like 100 grand less or 100 grand. I'm sorry, 100 grand more than our offer that we put in. And like, there's no way they barely penciled on the numbers we had offering a hundred
sure,
thousand dollars less. And I just got to thinking, like, if we would have invested in that deal, they would have accepted our offer. It could be looking a lot different right now because
you're
we
right,
had no idea what we were doing.
right,
And
yeah,
so yeah, it's so important to do your due diligence. And one thing that I've learned getting into this space is there's a lot of experts that have the experience that you can partner with. You don't have to do this alone. You don't have to do like
yeah,
Randy and I almost put an offer in on a deal having zero experience, right? Like
yeah,
partner with the experts and invest with the guys like Randy was talking about that have a track record that, are that have been doing this 15, 20 years, or even if a guy's, if a company's newer 4 or 5, 6 years, make sure they have a partner that has the experience of 20 or 30 years, right?
Yep. Yep.
And so those are just, yeah, definitely some important things that I look at now. And the nice thing about being, an operator or, and what we do as far as optimal equity group and impact equity is we get to cherry pick the deals, right? We get to cherry pick who we want to invest with. Like, we get a lot of deals that come across our table and, we get to vet these operators to see what's the most experienced operator that I'm going to put in front of my investors that I would feel comfortable investing my own money in, right?
Yeah. Yeah. Exactly.
So yeah, that's awesome there. Well, it's been a great conversation today. I really enjoyed, having you and just super excited to have you as our first guest. But I cannot let you go without our 4 fire questions that we're going to be asking you here. That's what we're going to call it today. Yeah, that may change.
Questions.
They're going to be, the fire round, right? But if you could you recommend a book on real estate for beginners just getting started out in this space? And then this is going to be a 2-part. So do a real estate book and then a mindset book that has, really changed your outlook. And yeah.
Okay. Yeah. So I would say this is a book that's kind of referred to, on my podcast as well. When I ask people for like the book for new or newer passive investors, it's The Hands-Off Investor by Brian Burke. It's a really, really great educational tool that kind of goes through the blocking and tackling of what we do. I think it probably provides the top 50 questions to ask a syndicator. It talks about underwriting. It talks about due diligence. It really just kind of covers everything from A to Z that the newer passive investor needs to know before they start putting dollars in their first deal. And of course, you can read it and use it like a textbook, but get it on Audible. It's somewhat entertaining as well. So I highly suggest that one. From a mindset standpoint, I've done quite a bit of work in the mindset space certainly over the last few years, but even really the last decade or so. But there's an author pair that I really, really enjoy, and it's Benjamin Hardy and Dan Sullivan, and they wrote a bunch of books. But one specifically is called The Gap and the Gain. And, the focus is essentially focusing on how far you've come versus how far you have to go. And by just simply shifting your lens from, essentially like a gratitude and just, gosh, look at how far we've come versus I keep falling short and there's so much more to do. That simple mind shift alone is just, I think it's had a profound impact on my life and a lot of people that have read it as well. So highly suggest that one.
Yeah, no, great book. I've also, read both of those books. And The Gap and the Gain was life-changing for me and Randy. I know you and I have both, kind of gotten to the habits of writing 3 things down, that we, the gains for the day, right?
Yep.
What did I accomplish? And because I'm so good about beating myself up. I can do 99 things great, but if I do one thing wrong, I will focus on that one thing.
Right.
And then, the wife asked me, how was your day? It was horrible. Right. It was horrible. I did this and this, but, so-and-so did this, or I didn't do that, and it was, just a totally different shift, like you had mentioned. And I kind of turned that into, and he talks about it in this book, is write down the 3 gains, right? And then 3 goals you want to accomplish tomorrow.
Yep.
And I also do 3 learnings. Like, what did I learn throughout the day? And so, that's been very helpful and life-changing, honestly.
Yeah.
So,
absolutely.
All right. So the next question is, what is the practical first step the audience can take to explore the passive, explore the space of passive investing?
Yeah, so I think they're doing the right thing by listening to podcasts. Absolutely. I would listen to, like and subscribe to Jared's podcast and listen to all of those. I know he's going to have great guests, at least after the first one. But really great place to start learning high level stuff about what's going on, and then pick up some books and start talking to everybody you know about this. That'll stay still long enough for you to talk to them. But I would say, like, at some point you're going to get to information overload, and I think it's really important to just take some action and invest. Always try to invest half of what the minimum is. Ask if you can do half, and just get some dollars working, because you can read about it, you can hear about it, you can talk to other people's experience about it, but once you have some money in the game, like, you really start to pay attention and you start to learn a ton from that process. So get the base level information and invest in a deal. And you can invest very small amounts as well. Like, it can be as little as $10,000. So it's not 50 or 100 or $250,000 checks you have to write to get started. You can start much smaller.
Yeah. No, absolutely. Yeah, there's a great ton of great resources out there, like you had mentioned. And yeah, I mean, the little shout out to Trivest, right? We've utilized that. There's different platforms you can use to invest, 10 grand and really just take a peek behind the curtains and see what this process of syndication is all about and how it works. And
Yeah.
like you had mentioned, Randy, how the sponsors communicate and, things, because if they're communicating well on 10,000, they would probably communicate the same, on 50,000 or 100, right?
Absolutely.
And if they're
Absolutely.
not, hey, it's something to look at, right?
Yeah.
So, all right. So what is a daily habit you practice to keep on track towards your goals?
Hmm. Let's see here. So, you mentioned the gap in the gain process, and that is something that I do religiously. Every day I write down 3 wins, I write down 3 goals, and the following morning I revisit the 3 goals and set the intentions for the day. And I've taken it a step further, where I'll do like a weekly review where I summarize all my wins and all my learnings. And then at the end of the month, I summarize all my weekly learnings. At the end of the quarter, I summarize my month. At the end of the year, I summarize all of the information. And last year was the first full year that I did that. And it was amazing to see everything that was accomplished at the end of the year. You mentioned the day, but like, weeks and months will pass, and if you're not recognizing the amazing gains that you're having, you have a tendency to forget. So that's been a big game changer for me, and something, yeah, I try to hold true to this year. This will be year 2 doing it, and I'm excited to get through. I just did a quarterly review, which was awesome, and I'm looking forward to do the yearly review here soon too.
Yeah, no, absolutely. That's great. And again, we've held each other accountable in that regard as well. And actually, now that I'm on record here, I need to be more accountable to that.
Sure.
Kind of fell back a little bit as far as sharing those with you. So, but yeah, no, that's awesome, Randy. And I think it's just the consistent action, right? It's the little small steps that just make it, such a big impact in the future. It's the boring stuff, right? It's the
Yep.
boring stuff that
Yep.
makes the biggest impact there. So before I let you go, Randy, tell listeners how they can get in touch with you and learn more about you.
Yeah. So I spend most of my time on LinkedIn. So you can find me, Randy or Randall Smith, at LinkedIn. But the website is impactequity.net. And I also have a podcast called The General Art of Crushing It, where I host a Thursday edition on passive investing as well.
Awesome. Thank you, Randy. Great podcast, by the way. So definitely another resource if you're just trying to educate yourself. Well, thanks again for, coming on the show and being our first guest. And
It's my pleasure.
yeah, when we're looking forward to kicking this thing off here. So with that, thank you, all the listeners for joining Optimal Wealth. And we will catch you next time. Thank you for listening to the Optimal Wealth Podcast. If you enjoyed this episode, please be sure to rate, review, subscribe, and pay it forward by sharing with a friend. Most importantly, be sure to optimize your results and take massive action on what you have learned here today. For more, visit optimalequitygroup.com.